Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, October 13th, 5:27 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week and what an eventful week it was, both to the upside and the downside, and take a look ahead at what you need to know for next week and update or review the 21 over 21 leaders list. Let's get right into it. And right out of the gate, if you're driving home and you heard on the radio, the Dow Jones Industrial Average was up 39 points. You might think that everything was fine in the market, but today was not a good day in any way, shape, or form in the market. Uh, we've changed market state from uptrend based on last Friday's follow through day to fading uptrend. And I don't have a lot of good to say about what went on in the market today. I reviewed the statistic last night about what we want to see over the first 5 days after the follow through day. If you get through the first 3 days, normally it's a good sign for the continued progress in the rally. If you get distribution on day 4 or day 5, the success rate drops to 30%. We got distribution on day 4 yesterday. Today, we didn't get a distribution day as defined by down on higher volume than the prior day. But today was much worse than yesterday from a leadership standpoint. We'll get into this and more. Here are let's check the trend gauge over here. So leaders yesterday were neutral with a green arrow. Now they're neutral with a red arrow. Terrible day for leadership today. Short term, things got a little bit worse as the S&P 500 closed back below the 21-day moving average. Medium term, things got a little worse because the NASDAQ 100 closed below the 50-day moving average. No, very often you get one close below and then right back above, so we don't overreact to one close below. But we will obviously be focused on what the reaction is to Monday. Long term, Nasdaq and S&P are still above their 200-day moving average. Dow, small and mid caps, are below. So what happened today? Out of the gate, things were fine. In fact, we gapped up 0.4% as overnight interest rates came down, and things were looking fine. We were rallying, made highs of the day right around 10 o'clock. At 10 o'clock, Michigan's sentiment survey came out, and it was underwhelming. The numbers were not as expected, and we immediately started to sell off. And then the sell off got more intense, despite the fact that yields weren't really rising significantly. And it was evident looking at the big quote screen that I have that money was flowing out of leading stocks and into more value type names. The big seven were not performing. Uh, and semiconductors were underperforming. Basically, anything where money had flowed into over the 4 days after, and things that looked good the 4 days after the follow through day, that a lot of that came undone today. So big seven hit, leaders hit, money flowed into value. Nasdaq 100 broke the 50, S&P broke the 21. It wasn't a good day. If you're a bull and you follow the O'Neill methodology and you look for leading stocks and leading sectors when the market is in an uptrend, because we just got a little bit weaker today, thus the update of the market state from uptrend to fading uptrend. Here are the final numbers. Big seven down 2.03%. RG8 really got hit yesterday. Another bad day today, down 1.1. S&P 500. This is why we keep a core holding of the S&P 500 as long as we're above the 200-day moving average. The market never gets into trouble, never gets into serious trouble as long as we're above the 200-day moving average on the S&P 500. And as money flowed out of the growth sectors, the high beta sectors, it flowed into the value sectors today. Just a paper cut for the S&P, down 0.5%. NASDAQ 100 down 1.3%. Dow positive, up 0.12. Dow's a price-weighted index, and United Healthcare reported earnings and had a good reaction, was up it's 2.6%, and basically uh, the price weighting of the Dow just cracks me up. I don't understand it. It is by far, by $200, it's the highest weighted price stock in the Dow. So it really can move it around one way or another. And in this case, it showed the Dow as being up on the day. Net net, the Dow really wasn't up on the day if it was market cap weighted or even weighted. Mid caps down 0.6, Russell 2000 small caps down 0.8, Global 60/40 down 0.16. Bonds popped today. Safety trade money flowing into them over the last couple of days, pushing the yields down. Um, when money flows into bonds, that's a safety trade when you've got interest rates rising. But counter trade today, because normally what we've been seeing with higher rates, uh, that it's been bad for markets today. We got lower rates and the markets weren't good. In-house GROTECTION, as leaders got hit, we took a hit, down 1.14% on the day. We'll hit the tail of the tape and review the 21 over 21. Let's get right into it. Here's the S&P 500. I'm going to take the stochastics off of here. And I noted yesterday, action was, by the end of the day, the action was okay. Let's go to the 5-minute chart here. Remind you about that heavy sell-off, which happened Tuesday and happened Thursday, right at 1 o'clock Eastern time on bad bond auctions. You would have thought we had a bad bond auction again today, but we didn't. As I said, first 30 minutes were fine. Then we started selling off, and it was a pretty brisk sell-off, a bounce, another brisk sell-off, and then a base into the close. But the bottom line is, yesterday we touched the ADMA, got back above it, bounced at the 8, got back above the 21 by the close. That's fine. Today, below the 80, breaking below the 21, closed just below the ADMA. It's not showing here, but let me get it back on the chart. And 1 second here. Let me get the 8 EMA back on the chart. We closed basically right on it, just less than 0.1% below. And if you go from the low to the high, we haven't retraced half of the move off of the low, if you want to look at it from a Fibonacci standpoint. And really, this is a normal looking flag, but it's under the hood what the disappointment in leading stocks looks like. That leaves me to be a lot less optimistic after the last 2 days than I was on Wednesday, and I really was optimistic on Wednesday. Even yesterday, how leaders for the most part held up while the market was selling off, but not today. Out of the gate, leaders were sold. So red arrow there. You see the update on the trend gauge. Just an unfortunate day. I almost titled the video. We went with safety dance, but I almost titled it "Fredo, you broke my heart." A hat tip to Michael Corleone in Godfather 2 when he confronted his brother Fredo for betraying him, and it was uh, the going from optimism to disappointment. That's that can summarize my take on the market after today's action and yesterday's action. There's just more going on than the market seems to be able to overcome. And when the money flowed into the big Nasdaq stocks, it's happening, then it's undone the next day. It happened again, then it's undone again, and it's we'll keep an eye, obviously, on what things continue to do, as we always do. We'll isolate weakness from leadership, but really, all in all, a disappointment at the end of the day today. Nasdaq 100, you can see it breaking the 50-day moving average, closing right on the 21. Lack of relative strength today for certain. Dow Jones Industrial Average showed relative strength today, mostly because of United Healthcare, but got back above the 200 and couldn't hold it. Couldn't hold above the 21 either, as the market sold off after the first half an hour of strength. Let's go to mid caps. Lower low, lower close today. Same thing with small caps. Lower low relative to yesterday. We haven't completely broken the lows of last week. Not on small caps anyway. Let's double check that on mid caps. No, not quite. But all in all, a disappointment in leadership. Try not to get too high or too low on these things because sometimes it's just one day. But I was really optimistic about all the setups after the follow through day. It's the most that we had seen for any of the follow through days that we had this week. Right out of the gate, things continued to act well. But when we look at the 2121, you'll see what I'm getting at. VIX with a spike today also back above the 21, above the 50, above the 200, up near, in fact, got back above this 20 area. There seems to be, today was supposed to be Friday the 13th, a day of jihad. I hadn't heard of, I did hear of a small terrorist attack in France, nothing really in the US, but that confrontation in the Mideast is continuing to escalate. Go to the dollar. Dollar up today. Now you would think with the dollar up, maybe we'd see some weakness, but no, we saw more flight to safety. Money flowed into gold stocks, and silver today. Big gap up, big volume. Will be participating in this next week. Up 3% on GLD, GDX, up 4.4%. And again, this is a flight to safety. When people get concerned, they go to gold, up 4.1%. Bitcoin has been weak as of late, not just consolidating after a move down on Wednesday. Let's flip the bonds now. Broad bond index up on the day, prices mildly down, kind of a tight range. There's BND, that's broad bond TLT, the long bond up 1.8, so yields mildly lower. Here's the 30-year down 1.87%, holding the 21-day moving average. So as of right now, the bounce off the 21 continues, but you didn't get the rising rates, and when sometimes supply and demand overtakes that, and that'll drive the prices up and the yields down. TNX in year down 1.76%, still holding above the 21-day moving average. Let's get to the tail of the tape. You can pause this. I'll hit the highlights. Fed Harker, he's a voting member. He said no more hikes today. That didn't increase or improve stocks at all. First close below the 21. Are we trying to get off of the bull case back into the bear case? We'll need more testimony next week from the market. Up 4 days, 2-day consolidation, but that includes a distribution day and an ugly day for leaders. Basically, right on the ADMA on the S&P, back below the 21 for the first day. Flight into safety. And also banks. 3 of the big banks and PNC recorded. They initially all gapped up. They all had ugly reversals. So that propped up the market for the first 30 minutes too, before those bank charts all took a turn for the worst. So in-house, we got stopped on quite a few things. Our long semiconductors from yesterday, our long FNGU, that's the big 7 plus 3. Uber with an ugly reversal, SMCI with an ugly reversal. We trimmed UPro on the first close below the 21 and trimmed VRT as our most recent buys turned negative. Big jump down in our exposure from 1.34 to 0.95, now below the equivalent of what the S&P 500 is. And the bottom line, headline, big 7 and leaders hit hard, rotation to value, NASDAQ 100 below the 50-day, S&P back below the 21-day. Is it a one-day overreaction? We'll see next week. But really, it's been 2 days, a distribution day, and now today, an ugly day for leadership, and also for the big 7, which had been somewhat of a safety trade. So let's go now to the charts. And we're going to look at, I want to bring in the weekly. There's the weekly. So we'll go with the daily and the weekly. And you can see what the what the return was for the week up here in the upper right-hand corner. Let's start off with what we owned or traded this week. We'll start with TBT. We bought that That's holding the 21, but down 6.6% on the week. So overall, rates pulled back for the week. TBT moves in the direction of interest rates. Nutanix still looking great, up 6.5% on the week, certainly showing leadership. Zscaler normal pullback, still acting great. Really on these charts, you want to compare where we are now to where we were on 10/6, which was the follow through day. VRT gave up the gains back into the base. That's why we sold 40% of our position. CrowdStrike still holding strong. FNGS sold this today. NRGU looking great. Energy had a strong day. SMCI broke below that 300 level, bounced at the 21, but our stops were hit. Palantir, uh, normal pullback on lighter volume. This still looks fine. We're slightly underwater on it. Uber, we bought this week, got stopped out today. Uh, Stopped out on multiple positions, but the net to the portfolio on all the stops was like 0.7%. So there was no significant damage done, and our balances are still above where they were prior to the follow through day. So whether we can maintain those gains and hopefully build on them, we'll see. But uh, as I said, not as optimistic as I was 2 days ago. ITA still above the 21. We're playing this through DFEN. XLRE failing at the 21. We're short this. We're playing it via DRV. I have the underlying chart in here, not the derivative. I've talked about that enough. TXT still holding the 21. CEIX, coal looking great above the 8. Elastic pulled back to the 21. Failed breakout yesterday. Strong yesterday morning along with the market, but that quickly turned tail. Dell pulling back, but still holding the 21. Akamai sitting right on the 21. Bellring continuing to exhibit leadership, up 3% for the week and 2.4% today. Constellation outside ugly negative reversal today. Fabrinet reversal. These were the first ones out even before the follow through day, but they're starting to give back some of their gains too. Abercrombie pulling back after 5 straight up days. Molina Health, this broke out. Same group as United Healthcare, which reported a great earnings report. So there we got a breakout that held. Duolingo, big leader, one of the first ones out, down 8.6% today. On heavy volume. Now, General Dynamics, we may have to switch from ITA because that includes Boeing, and Boeing had an ugly day today. But some of these defense stocks are breaking above their first day moves up. So we may flip from DFEN to General Dynamics or to Northrop Grumman. NOC had a nice day also. And that's it. That is 24 stocks actually out of the 21 as we expanded some things as we bought it today, and that's feedback on it. And many of the leaders holding, but not the action that you want from a follow-through day standpoint. From a stochastic standpoint, also disappointing. From a Fibonacci standpoint, retracement from the move off the low. We're still okay on the Nasdaq 100 and the S&P there, but like I said, under the hood, I'm not happy at all with what we saw the last 2 days. And that's going to wrap it. Remember, it's not how much you make in the market, it's how much of that you can keep. That's why we put in the work here to make sure that the winds are at our back and favorable for uptrends. Bit of a disappointment today. I probably said that 50 times in this video, but sometimes it's what you need to hear, not what you want to hear. And we'll see what next week brings on the market, but definitely the last 2 days undoing some of the good that was done by the follow-through day and the 3 days after that. As always, like your feedback, the email's don@revereasset.com. If you want to become a client, my partner, dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. And with that, I'll wrap up the big show for the week ending October 13th. This is Don Vandenbord with Revere Asset Management, telling it like it is, just the market facts, unfortunate though they may be sometimes. Thanks for listening and have a great weekend.